Hello traders. I wish to all of you a profitable year. If you don't have a trading plan yet, your goal should be create one, right after watching this video. Why set trading goals? It is important to set trading goals for two main reasons: to help you stick to your trading plan, and to allow you to trade more consistently. For those new to trading, this will mean setting a process-orientated goal, rather than one focused on outcomes. For example, goals based on following strict risk management and sound technical analysis, and even a daily routine involving exercise and a balanced diet, will encourage more consistent trading. Other examples of process goals include things like reading one trading-related book every month, writing down every trade you take and how much you profit and loss, journaling weekly or monthly to reflect on your trading results and expectations. Do not set goals like make $100 per day in the markets, profit 400 pips per week, make $10,000 per month trading. As mentioned in the introduction, these types of goals can set unrealistic expectations and spark an emotional burden that causes you to force trades if you have not met the monetary minimum. Instead, focus on what you can control, like sticking to your trading plan and keeping up on your analysis and potential trading opportunities. Let's continue. In this video we are going to show setups of the first week of this year. The first setup was EURUSD. This is a 4-hour chart. Price opened with a gap and didn't fill it. Price fill these zones most of the times, and we are using this level as a target. We marking a support and resistance level, but the best zone to look for sell trade is at the supply zone. Their price will find a lot of pressure from the sellers. We shift on 1H time frame. Our highlighted supply zone correlate with point of control POC of previous day, in this case Thursday 31 December. Our goal is to wait for price to touch this zone. Then we are going to look if price action confirms our bearish bias. Price touched this zone with a large bullish candle. If we study the last 3 candles, we notice that bullish strengthens increased candle to candle. A decreasing bullish momentum could have been better confirmation. This is why I didn't enter a trade on this moment, but waited for the next candle closure. We highlighted the next supply zone where price can find resistance from sellers. Previous day high is very important level too. Price rejected this level sharply. Personally, missed the entry at breakout below the support that was created from candles at the top. When I checked, the chart was too late for an entry and price didn't make another pullback. This setup could offer us a very good risk-reward trade, but we missed the entry.
Make sure to like and subscribe. This encourages us to make more helpful videos in the future.
Next setup was New Zealand dollar US dollar. This was extremely clean setup. We are highlighting the supply zone. We see clearly how price rejected this zone with engulfing candle. Do not enter right away when you see these strong candles. Always wait for pullback and enter at better level. That's exactly what we did. This zone is considered as new supply. Target will be next support level. This setup could offer us a 2.3 risk-reward trade. Price reached the target perfectly. As you can see, we had a clear structure here. If you want to join mentorship program, check the link on the description. Next setup was Australian dollar Canadian dollar. Price opened with a gap and failed to fill. Then we had a second rejection with engulfing candle. We saw a sell opportunity even though we didn't have the confirmation that we had on previous setups. Target will be next support level. Setup run on profit in the beginning and then turned against our direction. We should have moved stop loss to break even when price created a double bottom. We must accept the losing setups too, it's part of the game. Last setup was British pound Japanese yen. We have here 30 min time frame chart. Price is rejecting the support level with head and shoulder structure and pullback at consolidation. We have a clear rally base rally demand pattern. As you can see, the structure is very clear. Price is rejecting this level with large bullish candle. As I mentioned before, always wait for pullback when you see these types of exhaustion. This demand zone correlates with point of control of the current day. Our goal is to wait for pullback to enter a buy trade. Price pulled back perfectly and bounced in upside direction. Then we saw a rejection at previous high. We decided to move stop loss to break even at this moment. Now we have a risk-free trade that can manage with less emotions. Price consolidated for a period of time and finally reached the target. We choose for the target the next supply zone.
This video was sponsored by LonghornFX.
I've recently come across this brand new Forex broker, LonghornFX, and it is definitely worth sharing with you. LonghornFX was launched in 2020, and it seems that they've taken the online trading community by storm ever since. They're dedicated to providing new and experienced traders with the best trading conditions available in the marketplace. Trading is simply more accessible through their platform, and clients can open long and short positions from the comfort of their home, via MetaTrader 4, WebTrader or desktop app, or even while they're on the go through their mobile device, ensuring that they never miss out on those time-sensitive market movements. As you can see, with LonghornFX, traders get direct access to global markets and over 160 tradable assets. Whether you prefer to trade Forex, cryptocurrencies, stocks, indices or commodities, LonghornFX can meet all your trading needs.